welcome back to Bony's Life. Today we're diving deep into the crypto market. It's been a wild week, and I've got all the numbers, all the events, and all the triggers you need to know for this weekend. So grab your coffee, sit back, and let's break it all down. This is going to be a comprehensive review, so stick with me until the end, because the trading triggers at the end could make a real difference for your portfolio. All right, let's start with the big picture. As of today, January 23rd, 2026, the total cryptocurrency market cap is sitting at around $3.1 trillion. Now, that's down about 0.9% in the last 24 hours. And honestly, the market has been feeling a bit heavy this week. Bitcoin dominance is at 57.5%, which tells us that money is flowing into the big daddy of crypto rather than the altcoins. When Bitcoin dominance rises, it typically means investors are seeking safety in the most established cryptocurrency. Ethereum is holding about 11.4% of the market. These numbers are straight from CoinGecko, so you know they're fresh and accurate. Now let's talk about the king, Bitcoin. BTC is trading at around $89,150. That's down about 0.8% in the last 24 hours and down 6.7% over the past week. The 24-hour trading volume is a massive $40 billion, and the market cap is sitting at $1.78 trillion. It's been a rough week for Bitcoin, but as we'll see, there are some interesting technical setups forming that could lead to a big move. The question everyone is asking is whether we're going to break out to the upside or continue this correction. Ethereum is at $2,936, down 1.7% in the last 24 hours and down a more painful 11.2% over the week. ETH has been underperforming Bitcoin, and the 24-hour volume is about $23.6 billion. The market cap is around $354 billion. Ethereum has been struggling, but there are some fundamental reasons to be optimistic, which I'll get into later. The ETH/BTC ratio has been declining, which means Ethereum holders have been feeling more pain than Bitcoin holders this week. Looking at the other major players, Solana is at $127, down about 11% for the week. Solana has been one of the darlings of this cycle, but it's not immune to the broader market weakness. XRP is at $1.91, down 7.3%. Despite some positive regulatory news, XRP hasn't been able to hold its gains. BNB is holding relatively strong at $888, down only about 5%. Binance's token tends to be more resilient during downturns, and Dogecoin, our favorite meme coin, is at $0.125, down about 10%. The meme coins are getting hit hard, as they typically do in risk-off environments. But here's an interesting one. Monero, the privacy coin, is up a massive 26.9% over the past week. That's a huge move, and it suggests that there's some demand for privacy in the market right now. Privacy coins tend to do well when there's uncertainty about regulation and government oversight. Also, Ethena is up over 20% and Hyperliquid is up about 15%. So even in a down market, there are pockets of strength if you know where to look. This is why it's so important to do your research and not just follow the crowd. Now let's flip over to the derivatives data from CoinGlass. This is where we really get into the mechanics of what's driving the market. The 24-hour futures volume is $181 billion, which is actually down about 30% from the previous day. Open interest is at $132.7 billion, pretty much flat. But here's the key number. 24-hour liquidations are at $206 million, down a massive 65% from the day before. Lower liquidations mean less forced selling, which is actually a good sign for market stability. When liquidations are high, it creates a cascade effect that can push prices down further. The fear and greed index is at 25, which is firmly in the fear zone. Now, I always say that when others are fearful, that's when you should be looking for opportunities. But we're not at extreme fear yet, so there could still be some more downside before we see a real capitulation. The index takes into account volatility, market momentum, social media sentiment, and other factors to give us a snapshot of market psychology. At 25, we're in fear territory, but extreme fear would be below 20. The long/short ratios are really interesting right now. On Binance, the top traders have a long/short ratio of 2.19, and on accounts, it's even higher at 2.89. That means for every short position, there are almost 3 long positions. This is a crowded trade, and it could lead to a painful squeeze if the market moves against the longs. When everyone is on one side of the trade, the market has a tendency to move in the opposite direction. Keep that in mind when you're positioning for the weekend. Now, let's walk through the week day by day. Monday, January 20th, was a bloodbath. Bitcoin plunged below $90,000 as global risk assets sold off. The S&P 500 dropped over 2%, the Nasdaq fell 2.12%, and the Dow was down 1.76%. The crypto market followed suit, with Bitcoin dropping 2.6% and Ethereum falling even harder. This correlation between crypto and traditional markets has been a theme throughout this cycle. When stocks sell off, crypto tends to follow. The big news was Strategy, formerly known as MicroStrategy, buying another $2.13 billion worth of Bitcoin over the past 8 days. Michael Saylor is still staking sats even as the market bleeds. This is a strong signal of institutional conviction. Saylor has been one of the most vocal Bitcoin advocates, and his company now holds a massive amount of BTC. When the market is selling, he's buying. That's something to think about. But the real pain was in the ETF flows. Bitcoin spot ETFs saw a massive $483 million in outflows on Monday. Grayscale led the exodus with $160 million, followed by Fidelity with $151 million. Ethereum ETFs weren't spared either, with $229 million in outflows. When the institutions are pulling money out, you know things are getting serious. These ETF flows are one of the most important indicators to watch because they tell us what the big money is doing. The main culprit for the sell-off was geopolitical tension. President Trump announced a 10% tariff on European nations, including Denmark, Norway, Sweden, France, Germany, and the UK, over the Greenland dispute. These tariffs are set to take effect on February 1st, and if a deal isn't reached by June, they'll go up to 25%. This kind of uncertainty spooks the markets, and crypto, despite being a hedge, is not immune. When there's fear in the global economy, investors tend to reduce risk across the board. Tuesday, January 21st, was even worse. The total market cap dropped 2.4% to $3.1 trillion. 92 out of the top 100 cryptocurrencies were in the red. Bitcoin fell to around $89,100, and Ethereum slumped 5% to $2,965. BNB dropped 4.7%, and Monero, interestingly, crashed 15% before starting its recovery. The Fear and Greed Index plunged from 45 to 32, firmly in fear territory. The market was clearly spooked, and it seemed like everyone was heading for the exits. The ETF outflows continued on Tuesday, with over 8,000 BTC leaving the spot ETFs. That's a huge number. BlackRock's IBIT saw outflows of over 4,000 BTC, and Fidelity's FBTC lost over 3,000 BTC. The options market also turned bearish, with the Bitcoin 25 delta skew flipping to negative 3% from positive 5%. Traders were paying more for downside protection, expecting further weakness. This is a clear signal that the smart money was hedging against more downside. Wednesday brought a glimmer of hope. The bleeding seemed to stop, and we saw some stabilization. The big news was the release of a draft crypto market structure bill by the Senate Agriculture Committee. This is a huge deal because regulatory clarity is one of the biggest things holding back institutional adoption. The crypto industry has been waiting for clear rules, and this bill is a step in the right direction. We also saw the NYSE announce plans for a tokenized equities platform, another massive sign of traditional finance embracing our world. Tokenization is one of the biggest trends in finance right now, and the NYSE getting involved is a major validation. And importantly, those ETF outflows slowed down significantly, with only about 360 BTC leaving the ETFs on Wednesday. It felt like the market was taking a breath and assessing the damage. The CFTC also announced new senior staff appointments, which could have implications for how crypto is regulated going forward. Regulatory developments are always worth watching because they can have a big impact on market sentiment. Thursday was all about the options expiry. A massive $2.3 billion in Bitcoin and Ethereum options were set to expire on Friday, and the market was bracing for impact. When so many contracts expire at once, it can lead to a lot of volatility as traders and market makers adjust their positions. The max pain price for this expiry was around $92,000 for Bitcoin, which is the price at which the most options contracts would expire worthless. We often see the price get pushed towards this level, but as we'll see, that's not exactly what happened. The VanEck Bitcoin Chain Check report came out on Thursday, and it had some interesting insights. Bitcoin returned 12% over the last 30 days while volatility fell significantly. This is unusual because typically higher returns come with higher volatility. The report also noted that miners are pivoting to AI as the hash rate falls. This is a sign of the times as miners look for new revenue streams in a challenging environment. And that brings us to today, Friday. The options have expired and the dust is starting to settle. Bitcoin is trading below the max pain price, which is interesting. It suggests that the bears had a bit more control than the bulls heading into the expiry. Now, the big question is, what's next? The market is trying to find its footing, and traders are positioning themselves for the weekend. We'll get into the specifics of what to watch for in a minute. Now, let's talk about some of the other big events on the crypto calendar this week. We had some major token unlocks, which can put a lot of selling pressure on the market. Layer 0 or ZRO had a $42 million unlock, and that token is down over 50% since its launch. Plume had an even bigger unlock relative to its circulating supply, and it's down a staggering 88%. This is a stark reminder that you need to pay attention to tokenomics and vesting schedules. It's not just about the tech, it's about the supply and demand. When insiders can sell, they often do. On the positive side, we had some great news for Ethereum. Daily transaction volume on the Ethereum network rose to a record 2.1 million last week, while transaction fees actually declined. This is thanks to the Fusaka upgrade that went live in December. Lower fees and higher throughput are exactly what Ethereum needs to compete with faster chains like Solana. Vitalik Buterin also outlined a long-term roadmap focused on simplifying the protocol, which is great for the long-term health of the network. And BlackRock remains bullish on Ethereum, citing its dominance in tokenization at 66% market share. We also saw some interesting news from Iran. A Chainalysis report revealed that Iran's crypto economy reached $7.8 billion in 2025, driven by Bitcoin adoption amid nationwide protests and economic pressures. This is a reminder that crypto is not just about speculation, it's about financial freedom and access for people in countries with unstable currencies and restrictive governments. So, what does all this mean for the weekend? Let's get into the trading triggers. From a technical perspective, Bitcoin is in a really interesting spot. We have what's called a Bollinger Bands squeeze. This is when the price gets compressed into a very tight range, and it almost always precedes a massive move. The gap between the upper and lower Bollinger Bands has narrowed to less than $3,500, which is the tightest compression since July of last year. That squeeze was followed by a major correction. Now, this doesn't mean we're going down, but it does mean that a big move is coming and you need to be ready for it. On the upside, the first major resistance level to watch is that $92,000 max pain price. If we can break above that with some real volume, the next target is around $94,000. And then the big one, the 100-day moving average at $99,500. Breaking above the 100-day EMA would be a significant bullish signal and could open the door to a retest of $100,000. On the downside, the recent low of $87,600 is the key support level. If we break below that, we could see a quick drop to $85,000 or even $80,000. The options data suggests there's a 30% chance we could see $80,000 by June. The MACD indicator is starting to turn positive, which is a good sign for the bulls. The histogram is expanding, suggesting that momentum is building. We've also reclaimed the 20-day and 50-day EMAs, which is positive for the short to medium term. But we're still trading below the 100-day and 200-day EMAs. So the bears are not out of the woods yet. The RSI is at 45.86, which is neutral, meaning there's room for movement in either direction. Now, let's look at the fundamental triggers. The ETF flows are a huge one. The fact that the outflows slowed down this week is a positive sign. If we see those flows turn positive next week, it could be the catalyst for a major rally. The derivatives market is also giving us some interesting signals. The funding rates are mostly neutral, with Bitcoin at 0.007% and Ethereum at 0.006%, but the long/short ratios are heavily skewed towards longs. This is a bit of a warning sign, as it means a lot of traders are crowded into the same trade, and that can lead to a painful squeeze if the price moves against them. The Fear and Greed Index at 25 is a contrarian bullish signal. When people are fearful, that's often a good time to buy, but we need to see some confirmation before jumping in. The gold-backed tokens like PAXG and XAUT are outperforming, up over 2%, which tells us that there's still some risk-off sentiment in the market. People are looking for safe havens. When gold outperforms crypto, it's a sign that investors are nervous. So here are the trading strategies I'm looking at for the weekend. If Bitcoin can break above $92,000 with conviction, I'll be looking to go long with a target of $94,000 and then $99,500. I'd set a stop loss below $89,000 to manage risk. If we break below the recent low of $87,600, I'll be looking to either short or just move to the sidelines and wait for the dust to settle. The target on the downside would be $85,000 and then $80,000. And if we just chop around in this range, I'll be looking to accumulate on dips for the longer term. Remember, the weekend can have lower liquidity, so be careful with your position sizing and always use stop losses. For Ethereum, I'm watching the $3,000 level as a key psychological resistance. If we can break above that, we could see a quick move to $3,200. On the downside, $2,800 is the support to watch. Ethereum has been underperforming, but it could be setting up for a catch-up trade if Bitcoin stabilizes. The fundamentals for Ethereum are strong, with record transaction volumes and BlackRock's bullish outlook on tokenization. Now, let me give you a quick summary of what we've covered. The market is down this week, with Bitcoin off about 7% and Ethereum off about 11%. The main drivers were geopolitical tensions, ETF outflows, and general risk-off sentiment. But we're seeing some stabilization, and the technical setup is pointing to a big move coming soon. The Bollinger Bands squeeze is the key indicator to watch. On the fundamental side, the ETF flows are starting to look better, and regulatory developments are moving in the right direction. Looking ahead, we have the Fed rate decision on January 29th, which could be a major catalyst. The market is pricing in only a 5% chance of a rate cut, so any surprise could move the market significantly. We also have the Bank of Japan policy rate decision on Friday, which could impact global risk assets. And at the end of the month, we have the Plan B Forum in El Salvador, which is always a great event for Bitcoin news and announcements. It's been a wild one, but that's why we love this space, right? The key takeaways are that the market is at a critical juncture, with the Bollinger Bands signaling a big move is coming. The ETF flows are starting to look a bit more positive, but the derivatives market is flashing some warning signs with those crowded long positions. Before I go, let me also mention a few altcoins that are worth watching. Sui had a rough week with an 11% decline after a 6-hour network outage. The team has implemented fixes, but this is a reminder that even the most promising Layer 1 chains can have technical issues. XRP got a regulatory win with Ripple securing a preliminary electronic money institution license from Luxembourg, which will expand XRP-based payments across EU markets. An Internet Computer gained over 23% after the release of the Mission 70 white paper, which outlines plans to cut inflation on new ICP tokens throughout 2026. The stablecoin market is also worth watching. There's been some controversy around the stablecoin yield limits language in the Senate market structure bill, with the crypto industry saying it favors banks over crypto companies. This is something to keep an eye on because stablecoins are a critical part of the crypto ecosystem. We also saw World Liberty Financial's OneUSD integrated on the Myriad prediction market, and Bitwise's Chainlink ETF launched on the NYSE Arca. These are all signs of continued institutional adoption and integration with traditional finance. One more thing I want to mention is the importance of risk management. In a market like this with high volatility and uncertainty, it's crucial to protect your capital. Don't over-leverage, use stop losses, and don't put all your eggs in one basket. Diversification is key. And remember, the market will always be here tomorrow. There's no need to rush into trades. Wait for the setup, wait for confirmation, and then execute with discipline. Thanks for watching, everyone. This has been Boni from Bony's Life, bringing you the latest crypto market analysis. If you found this video helpful, please give it a thumbs up and share it with your friends who are into crypto. And if you're not subscribed yet, hit that subscribe button and the bell icon so you don't miss any of my future videos. I post regular market updates, trading strategies, and crypto news. Until next time, stay informed, stay safe, and keep stacking those sets. Peace.